Welcome to Early Edge Club, where we break down one microcap or SME stock a day using our simple structured 20 factor scorecard. Microcap investing can be rewarding, but it's also full of traps. Our goal with this series is to help every retail investor avoid the common mistakes and develop a more thoughtful approach when it comes to investing. If you're new here, I recommend checking out the explainer video on how to use the scorecard. Try scoring the company yourself as it will give you real hands-on clarity. Today's section is divided into understanding first the business model, the industry, and then we use our 20 factor scoring, and finally our take on valuations and risk. This company analysis and discussion are part of our internal conversation as we review companies from our ongoing 500 plus microcaps and small cap stocks. We are sharing this to retail investors can build a structured framework when it comes to microcap investing. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
Today, the company that we are analyzing is Prizor Viztech. So let's see the business. So Prizor Vistek is a Gujarat-based electronic surveillance company that started in 2017. It began as a component assembler, sourcing lenses, PCBs, camera bodies, everything. But now it has matured into a vertically integrated manufacturer. So if you see, this has happened in FY25 only with the launch of their state-of-the-art plant in Gandhinagar, housing SMT lines for PCB production, injection molding machines for camera bodies, and in-house branding and cloud infrastructure. This positions the company as not just an assembler anymore, but a full-stack surveillance hardware maker. So their products cater to both government and private sector buyers, and they have built a strong B2B dealer-led distribution network across 18 plus states. However, it's worth noting that 93% of their revenue currently comes from Gujarat. So moving forward, breaking down their performance by segment. So CCTV cameras contributed around 23 crores in FY24 and it grew to 44 crores in FY25, which reflects improved capacity utilization. We don't have a split quarter and quarter, but I think it can be this jump can also be because of their new manufacturing plant. Technical services then were 10 crores in revenue in FY20, 2 crores basically in revenue FY24, and it jumped to 5 crores in FY25. Television, touch panels, and monitors. This is another business vertical of theirs. So it contributed 10 crores in FY24 and it went up by 100% to 20 crores in FY25. There is a mistake here. The pie chart is a bit wrong. So most of it is contributed by CCTV cameras only, and then technical services, and then television and touch panels. Now, moving to our products, the company now offers a wide range of surveillance products, including 2.4 megapixel to 12 megapixel bullet and dome cameras, network video recorders from 4 to 128 channels, mobile DVRs, and AI powered system. They have in February only. They have announced their latest flagship, the Prizor Plus series, which includes advanced surveillance functionality such as seat belt and helmet detection, speed capture, thief identification, even in-camera attendance solution. This product line is built entirely in-house and supports their positioning as an AI-driven surveillance company. On the other hand, smart TVs and display panels are white labeled and marketed under their own brand. So these are manufactured by external vendors, meaning the company has to incur no manufacturing or labor cost here, but it still benefits from this high margin channel. It is aimed at institutional bundling basically. So let's see the industry overview. So India's surveillance sector is at an inflection point. So globally, the market is projected to grow at over 13%. And in India, this growth has been driven by regulatory mandates, rising crime, rapid urbanization, and digital infrastructure push under smart city and digital India missions. Crucially, the shift from analog to IP-based, cloud-connected, AI-enabled system is transforming surveillance from a passive security tool to an active intelligence system. That's where our new offerings like the Prizor Plus series with AI functions puts Prizor on the right side of the industry trends. So let's see the management overview. So the company is founder-led with Mitali Goswami as managing director and chairman, and Dashrath Goswami as whole-time director. Both bring over 7 to 11 years of operational experience in this security industry. The team strong operational grip, but currently they lack professional leadership depth beyond the promoters. So it is a risk if the company plans to scale nationally or go after large institutional clients. Let's see the historical performance. So Prizer's FY25 numbers are impressive on paper. So revenue nearly doubled to 71 crores. EBITDA margin rose to 21%, up from just 4.3%. So this is, I think, a lot of it comes from and in the future also, a lot of EBITDA margins, growth in EBITDA margin and margins as a whole can come through their integration of manufacturing, which they have done. The PAT grew at 84% year on year to 10 crores. They basically attributed the margin expansion to higher sales volume, turnover linked vendor incentives. So if they are doing higher turnover, they are getting some discounts from vendors as well as customers. Vendors basically, not customers. So cash discounts for, as I mentioned, the cash discount for from supplier payments. And also the costs have become a bit leaner because of their in-house manufacturing. So let's see some of the key takeaways. So the company has successfully evolved from a basic assembler to a fully integrated manufacturer. With Gandhinagar plant now operational, they produce everything from PCBs and camera bodies to branded units, as I have understood. This shift enables better margin, faster customization, and importantly, eligibility for large government and institutional contracts that require local value addition. Now, nextly, with the launch of their apps like Prizor Pro and Prizor I, along with their backend server infrastructure, they are not only just selling boxes, they are building an integrated surveillance solution. This opens the door to future monetization from analytics, cloud storage, and service based model. So, and next point, surprisingly strong contribution has come from TV segment. So, even though televisions and panels are third party manufactured, they contribute around 25% margin and forming a significant chunk of FY24's or FY25's PAT. This segment is helping offset the capital intensity of the surveillance business and enabling profitability during scale up. Next, last point, we have this pan India reach, but skewed geography. So basically, while Pfizer has 6,100 plus dealers across all states, over 93% of the revenue comes from Gujarat. The concentration could pose a risk, but it also suggests potential upsides if their products gain traction in other states. And another key takeaway is that they have a diversified product portfolio. So as we see, they have also started the TVs and touch screen panels also, which is mostly for institutional bundling only. So let's move on to the bull case. On the upside, the bull case is equally powerful. The most exciting development here is the recent Railway Ministry's initiative. So the Indian Railways is rolling out CCTV systems in over 4,000 coaches and 15,000 locomotives. So that translates into around 3.36 lakhs CCTV camera opportunity with BIS certification, in-house capability, and local assembly. Prizor fits the eligibility criteria. And even if they don't win directly, they can be a vendor to a large systems integrator, basically. So this is the biggest opportunity that they can get. I think this news has come few days before only, and I think this is one of the reason why their stocks is doing circuits for the last, I think, 2 to 3 trading sessions. Next, if we see, there is significant operating leverage ahead. So their new plant has a capacity of 50 lakhs units per year. But current utilization is, of course, far below that as their demand scales, especially through institutional orders or exports. Fixed cost gets spread over more units, so leading to an exponential margin improvement. Next, it is a perfect fit for policy tailwinds. So, Prizor is a textbook example of Make in India story, and with the government pushing for indigenous tech in public infrastructure, example smart cities, education tech, they are strongly positioned to ride that wave. Next is the launch of their AI-powered features in their Prizor Plus series, like helmet, seatbelt detection, two-way talk, speed capture, positions them beyond commodity surveillance. Add mobile apps and cloud backend to the mix, and they start looking like a surveillance tech platform, not just a hardware supplier. Next, we see the bear cases. So there are some risk here. So cash flow stress is there. So FY25 saw operating cash flows of negative 14 crores. So this was driven by high receivables and inventory buildup. If this continues, they may face working capital strain, particularly risky in a business that's scaling so fast and investing heavily in infrastructure. Next is over dependence on Gujarat. So, despite their national ambitions, 93% of FY24's revenue come from one state, Gujarat. So, that leaves them exposed to any regional policy, economic, or competitive shock. It also raises questions about scalability of their dealer network elsewhere. Next, import dependency on critical components. So while they have started manufacturing a lot in in-house, some key components might still be coming from outside. So might they still might be imported. So this can expose them to forex volatility, geopolitical risk, especially if the global supply chains are disrupted. So and the last point is the TV display business may dilute focus. So let's move on to our framework. So section one, government and governance and promoter behavior. So they had a fresh issue raising 25 crores in July 2024, out of which 14 crores were used for working capital, 4 crores were used for capex, and rest were for general corporate purposes. So because most of the funds were used for working capital, I gave a 3 on 5 score. A director and promoter track record. So as we talked about how the management is experienced, so both of them are husband and wife, and they own the majority of the stake of our company. And I didn't find any bad remark about them. So I gave 5 and 5 score here. Related party transaction. So yes, there was a significant related party transaction both in FY24, in FY23, and also in FY22 to Home Security Solutions. Now, this is a sole proprietorship owned by a relative of our promoter. While it is disclosed, it requires careful monitoring because if you as a percentage of revenue, so this amount in FY23 it was big. I think if we see the FY23's amount around 6.5 crores, so it becomes a 10% of the revenue. So it is a bit on the higher side. And there were unsecured loans from the director of rupees 2 to 3 crores in total because they are a bit bigger amount. So I give 0 and 5 in related party transaction metric. Next, board composition. So there are five directors, out of which three are independent, two are family on board. So it's good. Composition is good. So I give 5 and 5 score. Remuneration also, if we see 12 lakhs, 12 lakhs, so it's fine. It is not very big chunk of our revenue. It is a very less than 1%. So I gave 5 and 5 score. Key person resignations, so no key person resignations were there, so I gave 5 and 5 score. Auditor resignation where no auditor had resigned or no change, so I gave 5 and 5 score. Or because the annual report is not yet out for this year or last year, I didn't find auditor opinion, creditor opinion is also not there. So I gave 5 and 5 score because of course I do think the annual report will come out soon. So I gave 5 and 5 score. So I didn't find any regulatory or legal issue. So I gave 5 and 5 score here also. Investor communication. So because the con call was not there, I gave 3 on 5 score. Investor presentation for May 25 only they had uploaded. Before this, they have not uploaded it. And of course, annual report is not yet out. So I gave 3 on 5 score here. Now, section two, financial health. So, as I mentioned, concentration risks. So, basically, the top five customers make around 75% of their revenue for in FY22, FY23, FY24. So, it is likely that it will be the almost similar in FY25 also. So, because it is high, so I gave 3 on 5 score. Now, revenue growth versus receivables. So, the reason why I gave 0 on 5 here is if you see, the receivables growth has been approximately in line with how much the revenue grows. So in FY25, the revenue has grown by 99%, but the receivables have also grown by 98%. And as a percentage of revenue, also, it is a bit on a higher side. So I gave 0 on 5 score here. Operating cash flow to EBITDA. So it has been operating cash flow by EBITDA has been negative for the last 4 financial years. So I gave 0 and 5 score. So this is negative cash flow is driven by a surge in their inventory and receivables. Receivables I mentioned. This can also indicate possible overbuild in anticipation of demand. So 50 lakhs camera. I don't know if there is such demand in India. Even if they export, I highly doubt it is a very big number that they have set up the manufacturing plant for. We will have to look into it. So this is why I gave 0 and 5 score here in operating cash flow by EBITDA. So moving on to inventory trends, so I gave 3 on 5 score because the DSO was a bit higher side, so I gave 3 on 5 score. Also, the inventory days has increased. I think the reason for this higher inventory might be that because they are currently catering to B2B, I think, so they might be holding their inventory and they might be taking bulk orders. So it can be because of that, but because there are no con calls, we cannot be sure about that. Cash conversion cycle is also on a higher side mostly. So I gave 0 on 5 score in cash conversion cycle also. Moving forward to capex by revenue, it is good. So I gave 5 score. Debt level and interest coverage ratio is good. The quick ratio and current ratio is good. So on both these metrics, I gave 5 score. ROE and ROCE has also been good. So I gave 5 score. Growth consistency. So revenue has been growing at a consistent rate. Margins, EBITDA margin and PAT margin, they have declined in this year by 2 to 3%. So because of that decline, I gave 3 on 5 score. So to all this, the overall score comes out to be 70. And for the last valuation and final take, I'll hand it over to you.
Before we deep dive, quick note, we are opening Early Edge Club to a small founding cohort of 15 to 20 serious microcap investors. We are building a research first community where we break down businesses together. Every month, we deep dive into two microcap stock chosen by the community. You will be surrounded by thoughtful, like-minded investors from diverse backgrounds, and we are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. They were doing 2 to 4% operating margin and suddenly it has jumped to 23,
Hmm.
21%. Like, is it because of the TV, that they're bundling and selling, or is there anything that you would like to throw light on?
So there is nothing specific mentioned. As I said, the PPT also they have uploaded in May only. Before that, PPTs are also not there. So I cannot figure out how what is causing that increase. It can be because of this the TV and all because it is they are contributing about 25% margin they have in that.
But May is fine, but when did they come with the IPO? 24, right? Or which
Yeah,
year?
24 in July 24.
So basically September, March. Okay. So we need to keep a track on that. Before I go into the valuations here, there are two, three interesting thing that I've noticed. One is
Hmm.
for any CCTV camera, there's something called
Hmm.
STQC certification, standardization testing quality certification.
Hmm.
So what happened is like the government has made it mandatory from June 6, 2024 that all CCTV camera for government project must be STQC certified.
Hmm.
Prizor is not yet STQC certified. But
Okay.
more important, from April 9, 2025, all CCTV cameras sold in India, including those for general use, must be
Hmm.
STQC
Okay.
certified.
Yeah.
Hardly a 4 or 5 companies are STQC certified.
Hmm.
I'm sure the management must have applied for this certification as CCTV camera.
Yeah.
One another interesting point is, there was an Lebanese explosion which happened in October 1, 2024, right? And this was Chinese made CCTV
Hmm.
surveillance camera which was installed there, and the terrorist or whatever, they used their network to cause this. So this
Okay.
made the government much more vigilant in terms
Hmm.
of not using Chinese products when it comes to government tenders in CCTV camera. And if you see Indian CCTV camera market, High Vision Digital is the market leader and it's a Chinese company. So
Hmm.
basically, what this order has done is high vision to qualify for government tenders has become impossible, and this has created a lot of opportunity for local Indian CCTV manufacturers. So that's a
Hmm.
huge opportunity again. Secondly, Zycom, this is a 2023 data. This company, again, an Indian company, it's listed, but it is under bankruptcy. It used to be one of the top five players, so that is again creating a vacuum. CP, which is CP Plus, it's a famous brand, Aditya Infotech Vision. They've applied for DRHP. They are one of the market leaders.
Hmm.
So they have got the STQC certification. So industry dynamics is a lot of tailwinds. So let's see if how soon Prizor gets the certification, because a lot is now dependent on that. So this huge run is definitely because of the new order of CCTV camera being fixed in 74,000 coaches of railways. So let's see if they get the certification and they are able to get some leverage out of it. In terms of the best case, worst case, I'm not able to put a number right away. Both are giving the same revenue target. Not sure about the certification and the impact it might have on the next year, but to be conservative, let's take the margin of 12.5% and a PE of maybe 15, let's see. So the price target is coming to 17. If they maintain similar, they have grown exceedingly well. Definitely hats off to them, small company. So let's see how they do. And if they're able to maintain 2025 PE, market appreciates it, then the 1 year forward price target is almost double from where it is. But take it with a pinch of salt and all the risks that I have outlined before. Yes, a lot of cash flow from operating activity is built up in the inventory. Good part is their plant is live, ready to produce and ship. So let us see how they're able to capture that opportunity and the market share vacuum that the Chinese players have created. When we do a reverse DCF, since the operating cash flow and free cash flows are negative, let's take the net profit for FY25, which is 10 crores, and a minimum discount rate of 25 because it's a high risk, high reward opportunity, according to me. And if our price number of years is 5, and if the trailing multiple is 15, 5-year multiple is 15, then the implied growth rate has to be 33%. The company has been literally doubling its revenue, almost at least growing more than 50%. So let's see if they are able to achieve that. Keep an eye for the certifications and the numbers, and being really SME stock with low liquidity is definitely an issue, and there's high volatility like 200. So the way to play this is, if you're bullish on the sector, increase your time frame. I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20 factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching, and we will see you in the next one. Bye bye.